Good morning. My name is Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. Markets are still acting well, trying to extend that New Year rally, continuing to impress for the most part. So, Scott, where is the next level we should be watching in the S&P?
I think the next point of reference is 1474. Those were the highs that we put in September. I would say, what was it, September like 14th or so last year. So whenever you put a prior high in, that's a level that people use as a pivot point, especially if you're short. A lot of people who've been saying, okay, we're not going to resolve the fiscal cliff, the debt ceiling debate is going to take us to the brink, and if they've been short and rolling them up, I think that's one of the spots they're going to look at and see, okay, if we get through 1474, I better stop being stubborn and I need to cover. And if you look at the chart here of the S&P, you will see, we're right up into that area. We probably would have been above it if we didn't see some of the news out of Apple. But anyway, here's your level of the S&P. This was a nice break above this downtrend. We then digested 4 or 5 days worth of really nice action while the 8-day moving average caught up. And now it seems as if we're going to take this out. And how we take this out will give us some clues about the speed and the composure of the market this week as we head into earnings.
Now, you mentioned Apple. We have continued to see weakness in Apple and more negative news about the company today. But despite that, across indices, they're looking strong. So does that mean this is pretty constructive action?
It is, because you would have thought that if Apple were to be, if it was going to be below 500, the market would actually care. And then even in the first few weeks where the S&P was up like 50 handles, meaning the S&P I think went from like 1420 to 1470, Apple's down like 30 points still this year, even before today. So with that said, money's coming out of Apple. It's going in other places. I think mentally the street's in a better spot where we can rally without Apple. Obviously, it's a little bit healthier with Apple. But, you look at the chart of Apple here and you will see that, it's been under a lot of pressure. And even in 2013, when we came in here not knowing what to expect, the same complexion continued. This was the top. This was 703. Here's when we broke that 8/21-day moving average where for us the trade changed. And from there, pow. From that November low, we came back up to resistance, failed, came back down to heavy support. This was the beginning of the year. Remember, beginning of the year, I'm like, what could happen here with Apple? Maybe it could change. It ignited, went to resistance, never held a gap, came back down, and showed you that there was no change in the composure of Apple. So with this said, we're below 515. We're flirting with this 501 to 505. If within the first 30 to 60 minutes it gets below this 500 and holds below it, you then have to go to those macro charts, okay? And then you will see right here you have what is this, like 486. So 486 is right around here. Okay, so that could be in the cards today, 486 to 492 if we stay below 500, and then ultimately, next big support is until 440, but we'll have to see what happens. We could be under pressure here until earnings. So really right now, the big area that I know I'm watching with my guys is 501 to 505. It's below a pre-market. Let's see if there's commitment to those prices below it, in the first half hour.
Well, let's check the temperature of some sectors as earnings season heats up. With the speed and strength of the recent banks rally, do you think it has enough power to continue higher?
I think we have to look at Bank of America this week, JP Morgan this week, Goldman. So we're going to have a lot to look at. And, since the summer, this group's been giving you a lot to like. We talked about it on Bloomberg. I talked about it a few times when Bank of America was like at 8. It went to 12. On Friday, Wells Fargo came out with numbers, and they were fine. And they tried to sell off the news, and they couldn't. Wells Fargo, I think, was down minimum. I know it was downgraded today, but whatever. So if you look at the chart here of XLF, you will see that just like I showed you with the spiders would just say, well, the S&P was trying to get through the highs from September, okay? This was the high in September for the XLF. So if you look where we are now, it's well through there and above it and holding the 8 days. So that's what you want to see, that type of relative strength where your money should be. So at this particular point, I still think it's acting well. I know on the weekly chart, we've looked at it many times, and you can see on the weekly chart, it's still tight, and it's just breaking out, just taking back the 200-day. The XLF might be able to get to somewhere closer to 20 this year, so that shows you more upside for the year in the banks. But if you look at a 4.5% gain we've seen in January in the first few weeks, it matters on your entries and exits, and you're going to have to sit through some more consolidation.
Well, let's talk the Qs now back into intermediate resistance. Do you expect a break above this level now after this healthy digestion that we've seen?
I think it's going to be hard because of Apple. Apple's a big component of it. But, it's acting better this year. So if you look here, how you see a group that's in line and not ahead of the fact or not showing blaring relative strength, you look here at the Qs, and you'll see that, this was that Head and Shoulders top way back in, August, September, October. That gave us some nice clues that we would be getting that downside move into November. Here's your red dog reversal that came in. So it bottomed with the market. And then it also rallied on New Year's Day. And then if you look closely here, you have a nice little gap that held. So for those who were just looking for an entry, this was your entry for the new year as it gapped up and held. And now it does look like it's trying to take out this minor resistance. With Apple's pressure today, it might be a little hard, but if Apple tries to hold 500 and change and gap, and rally, then I would see more upside here. But overall, it's not leading, it's not above the September highs. But if you got involved here, there's still some money to be made. It's just not, in fuego like you would like tech. But with that said, just real quickly, I just want to show you the Russell, who is the small caps, where the growth is, where the risk is. This is already at highs. So this was a nice substitute for tech being a non-leadership role, having the Russell up there.
And industrials are also looking good. The XLI is back at highs, so is some continuation in store this week?
This one too, just like the financials, just like some of the home builders, showing relative strength. I have to get a little bit more in tune with these industrials because it seems as if this year some of the rotation has changed to some of the names that I'm more used to aren't acting as well. So in order for me to make or create alpha in my portfolio approach, so to speak, I'm going to have to start looking in other groups and changing a few of my methods here, especially with Apple the way that is. So so you look at the XLI, and if you try and take the actual name out of it, like if you just look at the chart, and I was like, okay, I'm not looking at the XLI, I just want to see a group that's above the September highs, because look where the September highs were. So this is also above it, where the S&P is not. Gapped up, held the 8-day, holding higher, looking good like it continues. So to find some names that are acting the best in this group does make sense, and at this point, industrials are still looking okay.
All right, and retail. The RTH has been basing for the last 2 weeks. 44.60 has been acting as the heavy resistance. So the key question is, can we see a break above it anytime soon?
I think just like the Qs, this has been a group that's more in line versus leading, and you always want the leaders because that's what moves the fastest. So here we're trying to figure out if it could play some catch up. I know that there was a lot of headlines about retail through the retail season, that it wasn't as robust as everyone thought, blah, blah, blah. You look at RTHs here, you'll see, it's trying to poke its head out. It's above all the moving averages. Like the Qs, so to speak, it's not above the September highs, it's below, so there is some more resistance. So I think you just have to be a lot more careful of the stocks you pick within this group, because it is not a leadership group. It's just basically in line or even lagging just a bit.
Well, coming up, we're going to go in the trenches with high beta tech, but first a quick commercial break. We'll be right back.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
We're back and talking high beta tech, which is a bit of a mixed bag right now. Let's take Amazon first. It's had a healthy rest, is now basing above new highs, so is continuation in store here?
I think that's what we're looking for. This stock always frustrates the shorts. Everyone's like, how does this trade? It's such a huge PE. What's the matter here? It has to go down. And PS, it doesn't. And that's why you have to just look at the technicals sometimes and put your opinions on the back door, because if you look at the chart here of Amazon, you will see, from the time that it ignited back in November, when it resolved this descending channel to the upside right here, okay, you had a quick beeline move back to the highs. There are no other high beta names, in tech world that were near those September highs. So first time it got here, it failed. Some guys got stopped out of their position right there. It made sense because you never know what it's going to go to, but then it held, where it had to. It held those moving averages and then reignited right here, then traded through the prior highs, and now it's holding here. So I think this is something my guys are watching for a potential cash flow trade. You have 269.50 or 267 to 269 as that resistance. So all these shorts that are pent up here, if we trade through it, they're going to get squeezed and you get a nice trade. There is a little bit of fear. They're like, okay, Apple's trading at a PE less than 12, Amazon's through the roof, so some people will maybe not want to hold this thing, but until the complexion here changes, I would say you stick with it, and then once we get to earnings, we'll take a closer look, because then the strategies have to change.
Now, similar to Amazon, Salesforce.com is also basing nicely at upper levels. Could a potential breakout be in store here?
You know what? I lied a little bit. I said that there were no other stocks in Techland above the September highs. This was one of the first ones that actually went. But this wasn't really considered high beta tech. This is in the cloud space, a little different than the group of 3 or 4 or 5 amigos that we talk about for all the time. But if you remember from off the charts, we showed this relative strength, and it was a really nice trade then. If you look at the chart here, it was right around here when it was nice and tight. Remember this? It was nice and tight. This was coming into even December. So I remember putting, I think it was on our note, a lot of guys were trying to buy it around 159, traded through the prior highs, gave you a little bit of follow through, tested it. Okay, look at it, tested the breakout there, and it's been slowly going higher. It's not an exciting trade here, but guys that are in their swing longs, they're doing fine. And I think the next time it comes in for a stretch will be if it can get above 174-ish and stay above there. But overall, CRM has been acting very well, and maybe it'll wake up a lot of those cloud names like a BMW and FFIV and some of the rest.
Well, continuing to surprise a lot of people is Facebook continuing its rally, even clearing some key resistance. But Scott, you sold the rest of your longs on Friday. Why'd you sell when you did, and what now?
You know what? In my 2013 note, I said that it can get to 32 to 34, I think, ish, for the year, and it's at 32.30 this morning. It happened in 3 weeks. So sometimes when you reach your objectives, you sell some and then you reevaluate, and then you have to maybe change your objectives. So at this particular point, you look at the chart. It's been a really nice move for those on, in our community who've been targeting it. This is when the shares got locked or unlocked and it rallied. Here's where it held higher. This was a really nice trade through this 24. You were able to even hold it as it held the 8-day. This little reversal got some of us flat, but then, into this consolidation was a great time to re-enter. Talked about 28.60, 28.70 in order to, get in motion, and look at it. It's been just going up, and it closed right here around almost 31.70. So if you take a more macro look and see where we are in the scheme of Facebook, we're coming right into this, this prior resistance point. So it could give you a bit of a problem. If you're not long Facebook, I really think it's not a prudent thing to do to be buying it here. If you miss this entry, this entry, this entry to come here, your entries need some work. Doesn't mean, like I said, it doesn't also mean it's a short. I know some guys are looking at it. I put a feeler short on Friday, and I do think there's a chance that they try and sell the news on the event tomorrow. But it's a lot easier to instead of anticipating it, to see that topping tail come into play in order to figure out whether or not the rest will come. But overall, this move was powerful enough that it should give us a lot higher prices, where that 32 to 34 price target is going to have to be raised, and we'll figure out what goes on in the next few days in order to switch some gears.
Now, what about BIDU, which has regained the support of most of its key moving averages, but is approaching its 200-day? So can we expect it to maybe meet some resistance there?
I think a lot of people have been thinking that, for the last week or two, because this was one of the laggards. This was one of the ones thrown out the window when everyone thought China would have a crash landing versus a hard landing, which wound up, having a somewhat soft landing. So a lot of guys are like, Scott, could you give me an example of a red dog reversal? What is it, and what could it lead to? This stock actually gave an almost perfect red dog reversal. If you look at the chart here, you will see, ever since over here, coming in from like April, it was as high as 150. It's had a slow, methodical move all the way to the downside. Then finally, right here, okay, right here, a lot of people were calling for $80 BIDU, $70 BIDU. You know what? It broke this level, came back above. So this low pivot here was 87.96. So once it went below it and went back above it, you could have bought 87.96, not knowing what it would lead to. Okay, not knowing that you'd get a very substantial red dog reversal here. Okay, but at that point, it reversed, closed strong, didn't violate it, and then you could have added once it broke this little pivot here, and then from there, it's acted pretty well, and now look where it is. So right there, that could have been a great little cash flow trade, or for a swing trader who bought using this as a stop and was really realistic with themselves and said, I'm going to hold this unless this breaks. You just made yourself a really nice move. Now it's at the 200-day. So for those not involved, we are coming into some pretty big resistance. Look at the size of this going across. So a rest here is due. And then I would say is that if it continues to hold above this 8-day moving average, it'll continue to trend. So at this point, I'd say give it a few days off, but this is how you find an inflection point to switch some gears and potentially make more than just a trade with a swing position.
And Google took a break last week as momentum slowed down. What do you expect this week?
Google's earnings, I think, are Thursday after the close, so we have a few days between now and then. This also gave you a nice reversal, gave you some commitment to it. Last quarter, though, was a fiasco. Their earnings were out intraday. That's what helped fuel the downside of the actual market. So I think with the lack of leadership, out of Apple and some of the other high beta names, it'll be nice to see if Google's report could be solid, if it could take out the prior highs and give traders, something to gravitate towards. And it would be even better if they split this thing, because it's a 700 plus stock, and I know guys out there have a hard time trading it because it's so, I call it loose, so to speak. It's easy to lose if you're wrong within the first few minutes. But if you look at the chart here, you will see that this was the last earnings. Okay, this is when it came out intraday and you had a wide range potent down move. It took about a month and a half for it to repair. Here is that reversal. You saw some commitment to it. Off the charts, we talked about it around 675 for it to break this. And if you bought it on this day and said, I'm going to give it to the 821 day, you really never had to get out. And here we are, all the way up here near 740. There hasn't been really much of a stretch here in Google as far as like a nice, powerful, wide range bar. But here is your new pivot. So if it were to get above 745 and a hold above it, then we're right back at these highs. But I think in order to get through this, you're going to need to see and wait for earnings, and they have a positive, solid report. Perhaps that could be the catalyst. But so far it's been a nice methodical trade and something to do, within the last few weeks, even back to when we had the reversal in November.
And of course, we have to talk Apple. Apple continuing to show weakness, more negative news about the company today. What levels does Apple need to hold to keep the bulls in the game?
I think they already, got the bull shot in the you-know-what. We were looking at 515. It broke. Then we were looking at the big one, 501, 505. Pre-market, it's been below that all morning. So I think the first 30 minutes, 60 minutes, they might try and, make a rally attempt above it. If they don't, and if it stays below there for that 30 minutes to an hour, you could see a little bit more of a waterfall. So if you look at the chart here, I know we went over it a few times today, so I'm not going to beat it up again, but here's your head and shoulders top. Here's big support. I was actually trying to short it here, believe it or not. Red Dog trying to short Apple, and I lost money doing it at 515. And now it's below this, so they took away that trade. But I guess it's better than being long because there was no reason for that. So here is this pivot low is 501.23. This is 505. Here you have 504. So that's why 501 to 505 is really big. So it's right in there now. Could be even a little bit below. So we break and close below that. You got to go a little bit, further out, and you will see that you have a small point of reference right here. This is 486. 486 to 492 if they decide to push it quickly in the first 15, 20 minutes. I would say if you're short, that would be a spot to, cover a little bit, and that might be a spot for it to try and do a micro bounce to retest 500. So that's something I'm going to watch out, but I'm going to give it some space. I have no position here, and I'm in no rush to short it or go long.
All right, let's do some quick hits here. Let's talk the GLD, where the downtrend is still in control. Where's the next level of support?
158.5 has been holding. It's opening, I believe, around 161. If you look at the chart, you will see it has a somewhat of a descending channel here, and you can see that there's a bunch of lower highs in place. Here's one, here's another. Then if you want to take it a little bit more extreme right here, you'll see that, again, same type of scenario. In order for this to really even attempt to breaking its bigger downtrend, it's got to get above 164 and hold above it. It's been holding this 158.5. I haven't been very active here at all because there's been no reason to. If you look, so on a micro level, 164 is big, and then like 166. On a macro level, I know a lot of guys still think that it's going to clear 1800 an ounce, which is really up here on the GLD. So at this point, you could say that it's been consolidating for the past 2 years really nicely, which it has been, but it's been out of play, and until it gets above 164, 167, I don't think any intermediate guys need to really watch it because, it's just not really fast, conducive action.
And the TBT finished down almost 2% on Friday, is now sitting right at its 200-day. So could we see a type of bounce here?
You know what, I've tried to go with this thesis that the short bonds, long TBT, and I've done this a few times in the past year or two where it's been a good trade, but if you ever sit around for more, it turns out to be, you get stopped out of your remainder. So with this one, I held a little bit longer than I would have thought because actually I wasn't here on the end of the day Friday and didn't see the push down. But if you look at the chart, you will see, I wouldn't get so worried yet. This was when it ignited. This is when this trade continued. You had some follow through, got contained by the 200-day. Then it tried to hold and bounce, and it closed on the lows. So I would say this is your pivot right here, 64, 68. So see if it, I think it's it's flat right now. So if it trades below it, I would see how much of this gap gets filled. But I'd love to really see it hold the 21-day. you know, and that would keep me in there. If it doesn't, I'm probably just going to get out, and I'm going to see if maybe, you know, the trade changes, becomes a little slower, and then it comes in somewhere around here, which could be viable. But I think guys that were looking for momentum here, definitely a little upset that it's showing some faulty action right into resistance. So it's showing you that it's been a good trade, but still not a great thesis yet.
Casinos have been acting well, and Las Vegas Sands is no exception. The intermediate uptrend there is still intact, so could this be a good place to test some longs?
I think that this one, since that July capitulation low, has been something to hold, and then you've had some time to trade around it. And so far this year, you know, we saw some money rotate into the casinos in the first 2 weeks. You always want to know where some of the hot money is going. And this broke above 49 and didn't look back. I know that there was like a reversal trade last week, gave you a little bit of a cute short, but now it looks like it's holding steady. You go to the chart here and you'll see that here is that low. Remember that capitulation low? That was when they reported earnings right there. Then you had a nice move, and then it took a while to consolidate it, and we love channels and gaps. And here's that channel to consolidate the move off the lows. Big gap up above resistance. That was your spot. You had to grab it and go quick. Nice move. Then all of a sudden you had this topping tail, and if you remember, it was being stretched that day, and you know, gave you a decent, you know, if you looked to get out, you could have gotten out, and if you looked for a short, you know, that day and a half move was okay. And now it's holding above the 8 day, playing some catch up. So I think the cute short is off the table, and at this point, a little bit more work above this area, and then it could continue, especially if the market wants to stay strong. So this one has been a good, you know, swing type trade, and also a decent active trader or an active strategy, depending on how you look at things. And this was more of the quicker money, but this has been a nice hold.
Very good. And Mosaic keeps climbing since November 16th. So where's that next resistance level?
Mosaic, I think, with the ags is in the game. You know, Monsanto's been best of breed. CF, always best in breed, getting better. Mosaic on potash woke up this year. Same, I guess, situation where you want to see if things get better or trade differently. And both this and POT have been acting better. But if you look at the chart, you will see that it has, you know, since the lows here, it's been methodically coming up really nicely. But here is a big level of resistance in the low 60s. If you look at the macro chart, which I'll show you so you could see what I'm talking about, you know, the path of least resistance coming into here is pretty clear. So right here is that level 61-ish, 62. So maybe it takes a pause there, and then that's when you really get to look and see what kind of commitment does it have. If it hits this level and pulls off a little bit and still holds the 8 and 21 day and goes sideways, the next time it tries to break through this level, it should do it with some authority. And then again, I do think the stock could see north of 65 and maybe even closer to 75 at some point this year for swing traders to stay with.
All right, well, with a lot of eyes on Apple, Bernanke set to speak today after the close. Where's your focus heading into trading today?
I think I'm just going to try and stay with the portfolio approach. I'm going to try and see if there's other stocks out there that are acting well that I could catch, you know, 1 to 3 days with. There are some things that I've tried to hold on for 4 to 6 weeks since those November 16th lows. But then as we come closer to bigger resistance, as we get near this 1474 and as we get into more of the heart of earnings season, you know, sometimes I have a little less positions on and I'm more of an active trader because, you know, things get a little bit dicey, so to speak, because some of these things have had big moves. So you really have to know whether or not you're going to hold through earnings. And I typically don't. If I want to do something with a calculated play, I'll take options into earnings because at least your risk is premium paid. So with that said, we have some bank earnings coming out this week, so we'll see how they continue to act. You know, I think Google is Thursday, and then Apple is next week. So there's going to be some areas of tech to really watch. And again, at 1474 is going to be that pivot. Do we blast through it, squeeze the shorts, and do some chasers and close up there, and then, you know, then there's really nothing in the way till 1500, and do we blast through, squeeze some shorts, get some chasers in, and then close back below and put in some kind of topping tail in order to tell us that a rest is due. So right now, we're still trending. Don't overthink it. Keep portfolio approach. Trade a tier system around it so you can book profits and stay with. And so far, that's been working, you know, since the November 16th low, and it's been working for years based on, you know, the complexion of the market.
All right, well, with that said, happy trading, everybody, and have a great day.